Well, for more on the global currency market, I'm joined live by Dan McClory from Irvine, California. He's the managing director and head of China and head of equity capital markets for Bousted Securities. Welcome, Dan.
Thanks, Rachelle.
Now, this week we saw China's central bank, the PBOC, easing some of its capital control policies. What do you think were the main factors behind that move?
Well, I think it's been working. So capital controls have resulted in keeping more money in China, which was the desired result. Remember back in 14 and 15 when Forex reserves were sold to the tune of about $1 trillion just to stave off some of that capital flight. So I think thus far the policy has worked. It's run its course to some extent, and the government is backing off a bit.
And we also saw some loosening policies regarding the yuan. So what have been some of the consequences of having this stronger yuan?
Well, as you would think, Rachelle, when money stays inside of China, it's going to seek out returns in various areas. So the concern would be that of perhaps further asset bubbles, as this money, which is not going outside of China to get a return, is looking inside of China. Could that cause speculation or bubbles in the stock market, in real estate, in, of all things, cryptocurrencies, for example? So that would be probably the most immediate concern.
Now, staying in Asia, let's also look at the worst performing currency in the region this year, the Philippine peso. What is dragging it down and what's being done to change course? Yeah,
isn't it ironic, Rachelle, that the Philippines has a growth rate right now on a par with China in the 6.5% range, yet it is the worst performing currency. It's at an 11-year low, the peso. What has happened is there is a large current account deficit. And of course, that is when your imports exceed your exports. And this has occurred in the Philippines for a pretty good reason, which is the import of construction materials and in some cases even equipment, because there is an infrastructure initiative underway in the Philippines, and it's resulting in some direct fixed investment. And even though Filipinos are some of the most voracious savers that we know, and they're throughout the world and sending remittances back into the Philippines, it still hasn't been enough to offset that current account deficit.
Now, let's also look at the US dollar. We've seen that it's been coming under a fair amount of pressure lately. What should we read into this current performance?
It's really pretty ironic, isn't it, Rachelle, that, you know, with the Trump presidency and all of the talk about trade wars and all of the talk about tariffs and China being a currency manipulator and all this other bluster that's occurred, what has happened here? The dollar has actually weakened. I think it's a result that, you know, certainly the U.S. wasn't planning on, and absolutely China was not planning on. But it has to do in large part with Trump being unable to implement major portions of his policy, tax reform absolutely being one of them, getting a budget through that was done on kind of a last-minute basis. But there have been a number of reasons, none of which I think could have been predicted, because when Trump was elected, you know, things were extremely bullish for a period of time.
Now let's cross over to a currency that's faring much better, the euro currency. What should we be keeping an eye on there?
Well, there's definitely growth in the Eurozone and in most of the Eurozone economies, that's for sure. Also, the ECB, the European Central Bank, has had a fairly tight monetary policy, which has boded well for growth. But let's look at how this all lines up with China. So you have a trade-adjusted exchange index, which consists of various currencies of the world, not just the dollar versus the yuan or the euro versus the yuan. So what's happened? The relative strength of the euro and the relative decline of the dollar, when you amalgamate them and you put them together, it's really resulted in just a slight decrease overall, which has made the Chinese exports slightly more attractive, but not so much that it's resulted in calls from the U.S. or Trump about trade wars and cheap currencies and things of that nature. So right. I think it's quite interesting. Again, the growth of Europe is starting to be factored in, right, and some of the weakness of the dollar as well.
And Dan, I do quickly want to get to digital currencies. We saw that Bitcoin really took a hit after JP Morgan Chase chief Jamie Dimon called Bitcoin a fraud and a bubble that will eventually blow up. What are your thoughts on the future of digital currencies?
You know, Rachelle, they're extremely difficult to value. They really, really are. And, you know, it's almost like tulip mania, you know, back in Holland, you know, centuries ago. They have certainly come to the fore, absolutely, with millennials, and even in some countries where they perhaps are perceived as being better storage units of value and transfers. But I find it really hard at the end of the day to put an absolute value on them, to say that they're going to break through to new levels. They're here, that's for sure, but countries like the US and China have already started coming out with legislation to make sure that they're kept in check. You know, in the case of China, exchanges have been banned. The initial coin offerings, or ICOs as they're called, that was put a halt to about 10 days ago. So I would say we've got to watch that space, and it's developing, but I think it's a bubble in the making myself.
We'll watch that space indeed. Thank you as always, Dan McClory.